Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, August 17th, 2022. Basically, as I started off this morning, I had a very strong feeling that what we're going to end up being in both markets actually, was an inside day, basically inside yesterday's range. And that's pretty much what happened. I built up quite a few Fibonacci because actually the upside is still in play, as far as I can tell. And as I had been discussing last night, there's a strong possibility they'll just carry it through right through Friday because it is a monthly expiration, and many things now wrap themselves around expiration and certain strike prices within that expiration to get out of positions. So that's all in the build and that's all happening. So I am considering very strongly that because the market tends not to really follow through in terms of what I look for, if that high from yesterday was the high, 43.28, that was it, boom. And we're just going to start working ourselves lower. The fact that we're hanging out, not really all that far belong below, we're about 100, no, actually we're about 40 points below the high. And we've gone down as far as close to not actually even 100. We've only gone down about 70. So it's still just like it's a small pullback, and they're just building up, and they're going to run this thing up likely tomorrow. Decent moves today. Not the easiest moves to trade. Again, with all the posturing going on in the individual components in these indexes, where you're having big pulls being done by what it's been most of this rally is Apple Computer, and then it gets assistance from Microsoft and Metaforce and Google, and now they were out there pushing the ends today. NVIDIA and Netflix had a good day. Tesla bouncing around up and down. Tesla's got its 3-for-1 split coming up on the 25th. So in a week from tomorrow, Tesla will once again split. So NVIDIA reports next week. So we're going to get that tussle coming in and out. All having an effect on the market, but basically what ends up happening at the end of the day, it is basically a fast race to nowhere. So we kind of went up, we went down, we went up, we went down, and ended pushing up towards the end of the day. Down here on the 4-hour chart, so nothing really to change on the larger daily chart. Continue to count this move here as what I've moved over to view number one is that it's a primary degree B wave, and within that primary degree B wave, there will be an intermediate wave A, which is what we're doing, an intermediate wave B, which is yet to come, an intermediate wave C rally, yet to come. That will then just complete the primary B. What comes after that then is a very strong, very forceful decline in the way of a primary C wave. Now just think about this. If I'm going to go back out to the daily just for a moment, if I'm going out to the daily to show you that this was the intermediate C wave. If we're going up 1 degree, it's similar to an earthquake, folks. A 3.0, you feel it, don't really get any damage. 4.0, you feel it a little bit harder, may get a crack, may have something fall. 5.0, a couple of things are going to come down. You're really going to feel it and wonder, is this the big one? 6.0, you then are getting your clues, it's the big one, etc. So as the strength of the earthquake, or just the number of the earthquake goes up, it's supposedly, I believe, 10 or 100 something % stronger. So same thing when we're going up in degrees. If I'm looking for a primary C wave down, this was the intermediate C wave, I'm going to look for it to be much larger. Right? This was basically almost, actually, let's just take a peek. This was 46.32. This was 36.39. So you got about 1,000 S&P points. So maybe on the primary degree, it's going to be 1,500 or 2,000 points down, and then be again as we get up to that larger C wave, which is larger cycle ABC. on that cycle C, it will be quite nasty. It'll be the accumulation. It'll be like we're looking out there on the schedule. It's not within this year. Absolutely not. Absolutely not. We might get the primary C wave within this year, and they're attaching black swan events coming, blah, blah, blah. It's likely all going to happen, folks, but the way the market is trading right now, it's getting ready. It's walking towards it, but it's not there yet. So what could we be looking at? Again, I still have this additional count sitting out here for the S&P and also the same in the NASDAQ, and that being that this intermediate C wave is not complete. In fact, it only completed the first minor wave down, and that suggests, number one, it's going to be pretty big. Now, it's still out there because of what the possibilities are. But you see, I've shifted it. I've shifted it and put it more into this view because it's beginning to feel more of that's actually what's going on. And certain things that are kind of topping or finishing or lining things up to get some additional downside going may not give us that primary degree push that we'd be looking for. So it might come in the form of an intermediate B wave, which would be a part of that primary, larger primary B wave, which is a counter trend rally. And then we do a primary C wave up, an intermediate C wave up. I'm so sorry. I know I'm get confusing. Intermediate C inside the primary, total primary ABC. The A wave will turn into, actually has been 3 waves. And then the primary B wave will be 3 waves also of intermediate degree, which will be an A, a B, and a C. And then the primary C wave will be 5 waves, but they'll be of intermediate degree. And then we'll break them down from there. So we're starting to build up bigger. So the moves will start to get bigger as we move up in degree. Okay, so for tomorrow, expiration, monthly expiration, I'm feeling pretty confident that Apple, they're going to want 175. They're going to give it a little shake. They're going to shake up the 177.5 strike and make sure they're all awake and that it's like we're coming and we may come for you type stuff. They were looking like they might have tried to give it a little bit of a push today. Didn't necessarily happen. The stock closes down small. But after the pretty strong rally that it's had, that, yeah, no big deal. What they did go after today, chips. You know, suddenly AMD and Micron and Intel and NVIDIA all caught fire and just kind of really gave us a little run. And that contributed to the push. Again, I believe a lot of this is in anticipation or preparation for tomorrow's expiration. So let's move down to the hourly chart. And going beyond, actually, let me start at that 4 hour so I can check one thing. I'm going to open this up. And here we have, this is the entire intermediate A wave. And here we have the minor A, the minor B. Now we're inside that C wave. And we've done minute 1, 2, 3, 4. We're in minute 5. It is extending and it's quite extraordinary, actually. So we have wave 1, wave 2, wave 3, wave 4. We're in wave 5. I believe actually we can do 1, 2, 3, 4, and 5 is the extended wave. And that's 1, 2, 3, 4. And now we're working our way up in a 5. And it was very confusing. So, but let me go over first what we have. 2 sets of Fibonacci. We have the Fibonacci that goes for this minute wave 5, the one that's in progress. That's going to be those on the outside here. Then I added an additional layer of Fibonacci extensions for the smaller 5th wave within that minute 5. And same calculation, just smaller and frame. Now I'm going to go down to that hourly chart and let's take a look at where this market should find resistance for each of these waves and see where we overlap. Now, for the minute 5th wave, minute 5 being 618 of minute 3, perfect. And that's at 43.21. We've been above it. So we need to go to this 5th wave, and we got 43.36. Still out there to play. Okay, so what comes up next? We have this beautiful conglomeration of resistance. So we should, on a push, get back above 4,300. We should break that high, which is 43.27, and head to 36, possibly 43.51, 43.61 to 43.69 or 70. That's a zone. And I don't really think we're going to get too much of a push beyond that. I don't think we'll get up towards the 100, but you never know. It just might. We shall see. But what also sits on that thing? Again, we don't have enough. We don't have 5 down, and we're not really getting a bill to determine that we should be heading higher, but that is seemingly what the market wants to do. Should the market determine that it wants to just drop out of the sky, then we're going to be looking here. So if this has to be pushed, and this is actually a 5, and this is A, B, and we get a C, and somehow we get back up here to 43.05-ish to finish it, and then start coming down, then it is going to be the start of the next leg down. Then that still could be an ABC fitting that internal intermediate B wave scenario, but there's a whole lot more to come in that. So I'm going to be looking for this to maybe give us another 5 down. So if this is going to be 5 and that's going to be a 3, we can do another 5 down and still stay in that corrective or a little bit larger mode. In any case, we'll do it day by day. So there we have, they're playing around here with the 50 SMA, the 50 EMA, the 20, the 8 and the 4, all just kind of played and clustering right there. Now we have resistance at 43.05. We have support at 42.55. Let them play, and that's what's happening. But on a break, I was still looking for the possibility to get here, so they moved up a little bit more, caught a little bit of that wind, that momentum, and they kind of are still angling up. Not bad, keeps the rally in force for right now. If it comes down and breaks, it gives it a nice pause and a reason to think twice about what they're doing. So that's all in there, and here are your levels. Again, if it starts to break, it should be coming off in 5. It should be a little bit faster, a little bit more with purpose and direction. Okay, I'm going to leave it there. Now I'm going to go back over to the NASDAQ now. Let's take a look at the other side of the pond, so to speak. Go back out to that daily, same story. Got the A looking for the completion of this minute 5. The minute 5 is subdividing, et cetera, et cetera. Nothing else has changed. Still would be looking for it to complete a minor C and then that intermediate wave A as a part of this primary B wave, which will be up by the end. And so same story. If it is complete, we're looking for the intermediate B wave bringing it down. Carries a lot of potential to drop this market back down to 11,500-ish. Certainly can. And that would just be in fib retracement. But right now, it still holds resistance. 13,704 with that high even being higher, being up, I believe, at 40, almost 41, it did not hold. So I continue to call 13,704 up to 41 resistance. So it needs to get through and above that level to prove intent and to finish this wave. If it's not done, then this is where it's going to go. It has the potential where they could push it to 13,930 and then get up there and start touching that 200 SMA. Not out of the picture. Now, let me go down to that 4-hour chart and let me open that up and see if there's a chance that I can give one more that might give us that push. That was the 4, 1, 2, 3, 4. It's not going to be real pretty, but I'm going to try to put it in where I think it probably should be. And that was a little bit higher, but I'll fix it in a second. So, and let me go inside each one, edit the properties of extension 2. That's the one. Middle point, 37. middle point was, I believe, 40. We're going to actually call it 41. It was 77, and the end point was that low right there, and that was 0625. 06.25, and the beginning point was way down here. And that was at 11,479. What? The beginning point? Is that? No, it's up here. Excuse me. I'm way out of line. 13,287. 13,287. I was cutting myself. I'm just counting away. Don't mind me. Yeah, I saw that and went for it. Okay, so now that's the insides are in. And now let's go down to the daily hourly chart, long day, folks. And take a look at inside here. So first thing I want to do is pull this down and then roll it and pull it down again. Now push it up. Sorry, and then pull it down. I'll get this all correct, this fancy stuff. Oh, brother, that didn't work. 4 hour, 1 hour. Open it up and we'll take a look. Okay, so we have the outside is the larger and the insides are this smaller fifth wave. So the smaller fifth wave is going to find resistance, and we wanted to get above there to create a nice clean package. And that would say that we get 13,763, 100% at 13,860. Then we have the other side coming in. 860, 930. So this makes it a nice little cleaner. You know, this to think the market's really got to push, and it can. They get Apple going tomorrow, it will go with it. But I like these lower levels because if it ends up being like today, they'll push, but people are getting tired. People are like, okay, please, just get it over with. So it might get thin. So same story. We're looking for this upside. If the market turns from here, we're going to be looking like this was a completion, but it's not as clean as it is in the S&P. So this may not be what I would think maybe an ABC, and then another drop down. So either this is an A or 1, 2, 3, 4, 5, and this is an ABC for a 2, and then we come down, or an A and a B and a 2, whatever. There are those two possibilities. So, but for this, I look maybe up to here. If it's going to be a completion point, that this was the extension and it moves, then to get above there, it's going to get up into this zone. All right, I'm going to leave it all there. Again, tomorrow is expiration. And so it's going to be pretty important that we just follow the moving averages and follow the Fibonacci's and follow what you're seeing in the price action. And then just pay attention to if it's slow, if there's enough volume, et cetera, et cetera. Who knows? I mean, I'm expecting it to at least be, I think, somewhat busier, but we may have periods where it just gets slow and then somebody comes in to do their thing. All right. Have a great trading day tomorrow. Have a great weekend. And the next update will be on Sunday, August the 20th.